Bank lending is up 80% year over year, but they're not lending to everyone. And here's who's going to qualify. And commercial real estate financing is making headlines again. And after several years of higher interest rates and tighter underwriting and cautious lending activity, commercial bank loan origination surged nearly 80% year over year during the first quarter of 2026. And that's welcome news for investors, developers, and business owners looking to finance acquisitions and refinance existing debt, but also those expanding their operations. However, there is one critical takeaway. And banks have more money to lend, but they're also still being highly selective about who receives it. So if you're planning to purchase commercial real estate this year, understanding today's lending environment could dramatically improve your chances of approval. So why bank lending is increasing? Well, several factors are really driving the resurgence in commercial lending right now. And improved economic confidence is the bedrock there, but also increased liquidity throughout the banking system and also stronger commercial property fundamentals in many markets. And there's competition among lenders for quality borrowers, and interest rates are starting to stabilize. And banks want to grow their commercial loan portfolios again, and they simply want to do it with the right borrowers, is the takeaway. So, who qualifies for commercial financing in 2026? And the strongest borrowers typically share several characteristics. One is there's strong cash flow. And banks want to see that your property generates enough income to comfortably cover the mortgage payment. And a healthy debt service coverage ratio, or DSCR, remains one of the most important underwriting metrics to stand by that category. But also good credit. Both business and personal credit continue to matter. Now, while every lender has different guidelines, borrowers with strong credit will generally receive better interest rates and higher leverage and lower fees and faster approvals. And experienced sponsorship is always rewarded. And commercial lenders place tremendous value on experience itself. So if you've successfully owned or managed commercial properties before, lenders view your application as significantly less risky. And first-time investors can still qualify, but they often benefit from stronger guarantors or experienced operating partners. But also adequate liquidity. And banks want to know whether a borrower can weather unexpected events and expect lenders to want to review cash reserves and business liquidity and retirement accounts and investment portfolios. And having reserves available after closing increases the lender confidence in your application and in your request. But quality commercial real estate is another one, and location still matters. And properties with stable tenants and diversified income in desirable locations generally are going to receive more favorable financing than, say, a highly specialized or a distressed asset. So let's talk about what banks are still avoiding. And now, although lending activity has increased, many institutions remain cautious around highly leveraged transactions and weak cash flow properties, but also speculative construction and hospitality without strong operating history, or heavy value add projects without adequate equity involved, or borrowers with limited liquidity. And these deals may still get financed, but often through alternative lenders rather than traditional banks. So why working with multiple lenders matters. And every lender is going to have a different credit appetite. And one bank may decline a hotel while another actively seeks hotels and hospitality financing. And one lender may avoid construction while another specializes in it. And that's why working with a commercial mortgage advisor who has access to hundreds of capital sources often produces better results than relying on a single bank. And rather than trying to force every deal into one credit box, experienced capital advisors identify the lenders that are most likely to approve your transaction. So, final thoughts for the day. The return of bank lending is encouraging for commercial real estate investors for sure. And an 80% increase in loan originations is a signal that there's renewed confidence in the market. But today's lending environment still rewards preparation. So borrowers who present strong financials and quality assets with adequate liquidity and realistic leverage expectations will continue to receive the best financing options. And if your deal doesn't fit one lender's criteria, that doesn't necessarily mean it's a bad deal. It simply means that you may need to find the right capital source. And at the CommLoan Empower program, we help commercial real estate investors access financing solutions from hundreds of lenders across the country, which increases the likelihood of finding the right loan for each property and each business plan. And that, my friends, is it for the day. Thank you for watching. My name is Bill Rapp. I'm with the CommLoan Empower program. Please visit my website, billrapp.commloan.com. You can start a pricing quote as well, schedule a consultation, so that way we can have a conversation. Thank you for watching. Take care.